Gold Rush 2.0, is the flight to safety a sign of coming black swan fears or white swan threats? Sriram Ananthakrishnan 360 degrees banker, building global businesses, international trade, treasury markets, trader, structured finance, strategic financial leader. As we embark on the often unpredictable journey of 2024, a complex web of challenges beckons our attention. This year demands a strategic approach as we navigate both anticipated, white swan, and unforeseen, black swan, events. Let's leverage data to understand these risks and consider positioning our portfolios for success in this dynamic environment. Black swan jitters, a quantifiable concern. The recent surge in gold prices is a telling sign. Year to date, gold has climbed 18%, surpassing the S&P 500's modest 5% gain. This flight to safety reflects a growing anxiety about black swan events, unforeseen, high-impact occurrences that can disrupt markets. A recent survey by Bank of America shows 72% of fund managers fear a black swan event in the next year, with potential cyber attacks, escalation of the Ukraine war, and sovereign debt crises topping their worry list. Bitcoin, another perceived safe haven, has also seen significant volatility, fluctuating over 30% in the past quarter. Notably, the historical link between gold prices and Treasury inflation-protected securities, TIPS, yields seems to have weakened. Despite slightly rising TIPS yields, gold prices have increased 15% year to date. This suggests investors are seeking alternative hedges beyond traditional fixed income assets. Bitcoin, the digital darling of the financial world, has soared even higher than gold, indicating a seismic shift in investor sentiment towards alternative assets amidst mounting uncertainties. Indicators flashing yellow, data-driven concerns. Several key indicators raise concerns about potential disruptions. 1. Geopolitical tensions. The ongoing war in Ukraine and the Red Sea crisis has sent shockwaves through energy markets, with Brent crude oil prices surging 40% in the past year. 1. This fuels inflation anxieties and worries about supply chain disruptions. 2. Yield curve inversion. The recent inversion of the US Treasury yield curve, where short-term rates exceed long-term rates, is a historically reliable recession indicator, preceding the recessions of 2001 and 2008. 3. The US debt time bomb. The ballooning US national debt, exceeding $30 trillion, presents a significant white swan event, a highly probable risk with potentially devastating consequences. 3. Rising interest rates could significantly inflate debt servicing costs, crowding out productive investment and worsening inflation. 3. The Congressional Budget Office projects interest payments on the US debt to become the fastest growing category of federal spending in the coming decade. Review your portfolio for turbulence, data-driven strategies. Given the potential volatility, here are some data-driven actions to consider. 1. Diversification is your anchor. Consider spreading your investments across various asset classes, focusing on historical performance during turbulent times. 1. According to a Barclays study, commodities like gold and oil have outperformed both stocks and bonds during the past 5 major market downturns since 1980. 2. Consider alternative strategies. Explore alternative geographically diversified investments in emerging markets with strong growth potential which can also offer diversification benefits. 3. Maintain liquidity. Consider to keep a portion of your portfolio in cash or easily accessible assets. 3. This provides a buffer for emergencies and allows you to seize buying opportunities when markets dip. 4. Risk management is your captain. Implement a risk management strategy that includes stop-loss orders to limit potential losses if the market takes a sudden plunge. 4. Additionally, consider using option strategies to hedge against specific risks, such as a potential decline in the stock market. Asia navigates a delicate balance, regional considerations. Asian economies, particularly China, face their own set of challenges. Elevated US bond yields, if they materialize, could exacerbate existing problems like China's property crisis, where outstanding debt has reached a concerning $34 trillion. Additionally, high youth unemployment in China, around 18%, remains a significant concern. Central banks in Asia will need to carefully navigate this complex landscape, balancing inflation control with economic growth. The takeaway: knowledge is power, data is your compass. While predicting the future is impossible, understanding the data behind potential risks and taking steps to mitigate them is crucial for successful investing in 2024. Stay informed based on data-driven insights in this dynamic environment. Knowledge is power and data is your compass. Thank you for watching this video. Follow me on LinkedIn, https://www.linkedin.com/in/Shriram77x Twitter, Ram Your Voice YouTube, https://www.youtube.com/@ramyourvoice/featured